I'm sharing with Maritza Chiaway from Prosperity Home Mortgage, and today's topic, the all-important buyer process. We realize a lot of buyers, and especially the new buyers, don't know what to do besides start looking for a house, and it can get pretty crazy and stressful once the clock starts ticking and you identify a house that they love. But most importantly is the pre-approval process, and that's where Maritza comes in. Maritza, tell everybody about the pre-approval process and what's done, how long it takes.
Thank you, Tom, for having me. So the pre-approval process is very important. A lot of people, now that this pandemic, it's almost over, we're starting to see more showings week over week, either virtually or in person, right? So it's very tempting to go out and look for houses and look at the properties without having a pre-approval. The last thing you want to do is just to stay on the sidelines and say, hey, I'm going to find a property first, and then I'll take care of the financing, right? Best way to approach is to take care of the financing first, all that paperwork, get all the information vet out, income, asset verification, employment information, get that all fully underwritten, have a loan commitment ready, which literally takes no more than 5 days, and then be able to put an offer in a house that is actually solid, right? In fact, when you have a pre-approval loan commitment, you're going to have better negotiation skills versus someone that just has a pre-qual letter. So don't miss out on the opportunity of being pre-approved and having a loan commitment in 5 days, which is going to online. You don't have even to have all the paperwork with you, because we can do automated confirmation of your assets, income, and credit. So it doesn't really take that long.
Mm-hmm. And again, that's it's a great key also for the real estate agent, me, so we know more of an exact price range, because most people, they might have an idea of what they can afford or their range, but this is a lot more precise, because we've also, for instance, if they're looking for a condo or townhome, there might be association fees and then taxes. You've got to factor all that in. So we know more of an exact number, and then we can convey that to the buyer that, well, factoring in this other stuff, this is what it's going to cost you a month. And then they know their limit more precisely. So we get them in. That's one of your great tools Prosperity has, which we've talked about before, is the Buyer Advantage program, where we get them the pre-commitment, and we've got all the paperwork, all the numbers, they're ready to go. They've got a 90-day lock on their rate, and all we've got to do is go find them the property. Right. So that's the next step then, once we know their numbers in the range, is their home search. And from my experience, a lot of the buyers are starting online now, and they've got an idea, but generally I think it's going to take a couple weeks or a month, or even longer, depending on inventory or lack of inventory, to find that home. And then that's when really the fun all starts. So we submit an offer, and then we have the pre-approval letter, which we include in all the other forms. And that's the first point of negotiation, is the price, and included in that is the closing costs. And that, we want that to be kind of the focus. That's kind of an unknown factor that most buyers don't really get, that there's a lot of other fees along the way. And for instance, it's going to cost for the appraisal when they do their home inspection. That's all out of pocket expense. They've got to have their earnest money usually within 3 days once their offer is accepted and it goes binding. But that big area of negotiation too is on the closing costs. And not only we negotiate that, but that's you factor in the price and the closing costs when you make that initial offer. And Maritza's got some great information on that, on the closing costs we can look at right now, and we'll talk about that a little bit.
Thank you, Tom. So I'm going to share a screen that I think it will be very helpful for our buyers when, first of all, they're shopping for rates. Okay, when you shop for rate, your buyers will be given a loan estimate, okay, up until the day or a few days before closing, okay. Now, when it comes to closing, the actual loan estimate becomes a document called a closing disclosure, okay. So they're both the same, they're just named different. Loan estimate before closing and closing disclosure at the actual closing table.
And that shows everything that it covers what was initially talked. You want them to match up. It shows the sales price, the rate you locked in, other factors on what was negotiated in the deal, right?
That is correct. In fact, I'm going to share my screen, and I have here a very an actual closing disclosure. The names have been crossed out for safety reasons and confidentiality reasons. But if you can see, this is a closing disclosure that used to be the loan estimate, and this is right at the closing table. So on the first page, you'll see most of the information regarding the loan. On the right-hand side here at the top, you can see it's a 30-year purchase, fixed rate, it's a conventional. You also see the other types of loans, FHA, VA. If this box is marked, it will be a jumbo loan, okay? Got the sales price here, and the loan amount here, interest rate, and this is your monthly principal and interest payment. And here you have your monthly payment, including taxes and insurance, okay? If you go down, you'll see the portion of your payment that goes to taxes and insurance. And right here, we'll see the closing costs. This is the amount of the closing cost, okay?
And what was that sales price? Excuse me, Maritza, what was that? I want to just, so it was 228,000. So,
actually it's 255, Tom, right here.
I see it. That's the loan amount. I'm sorry.
This is the loan amount.
So 255. So again, the rule of thumb realtors are thinking is your total closing costs are generally going to be 2.5% to 3% of the purchase price. So that's right about 3%. That it was 8,000, correct? 8,000 and something.
Yes, 8,017.
Yes.
Mm-hmm.
So again, that's kind of that unknown. Most buyers don't understand that's another area of negotiation so we're going to make an offer on the purchase price, and then we're going to ask for some closing costs too. And again, it depends on the market. Sometimes they split it. Sometimes the buyer will pay more or the seller will pay more. It really depends. Each offer and property is different and depends on the conditions of that local market. But and this is the important stuff right here, though. What are the closing costs? What it consists of? So that this is great. And you guys got it broken down at by item and by price. So you can, in some of these, most of the fees are required. Some can be waived or reduced, but some can't be adjusted, right, Maritza?
That is correct. By example, if a buyer wants to compare lenders, two different lenders for the same loan, okay? Really, the title and the escrow, which is the prepays, taxes and insurance and the property, those are what, what the title fee, the title company charges, and what the property taxes are on the property, and the hazard insurance on the property. Those are really the same fees across the board, regardless of the lender that you go to, okay? The title fees might be adjusted depending on what the title company charges, but they're normally around the same ballpark figure, okay? The other things that can be adjusted will depend on what interest rate you choose, okay? So if, by example, you choose a higher interest rate, then you most likely will get a lender credit, and that lender credit can help you to reduce your closing costs, okay? Vice versa, if you pick a lower interest rate, then your closing costs tend to be higher than the regular 3%. Okay, so there are ways to change the amount of the closing costs depending on what interest rate you want to have. It's called lender credits.
Mm-hmm. And the good news too with the closing costs is it can be rolled into the loan, correct, for the buyer. And as you can see, the appraisal fees an out-of-pocket expense, like we talked before, but the closing costs can be and are generated into the loan.
They can be included in the loan in the form of seller concessions.
Mm-hmm.
Okay, so if, by example, we have a closing cost of $8,000 here, and in this case, maybe the seller would have said, hey, I'm gonna pay $4,000 out of your $8,000 closing cost, and my closing cost is not gonna be $8,000, it's gonna be $4,000.
Mm-hmm.
But like you said, it's technically included in the loan and into the sales price. When you gave the example of having a house with sales price of 200, but the seller is paying $4,000 in closing costs, they're really getting 196. So that $4,000 cost, it's what is included in the loan.
Right, right.
Mm-hmm.
And again, depending on the loan, a traditional 30-year, the closing cost spread over 30 years isn't going to be a whole lot of money, but it all sounds like a lot when you're making that initial offer. And but once you break it down and you can see where it goes, and a couple of the things like in Georgia, that the transfer tax, and there's a couple other taxes that are it's a regulated, it can't be negotiated. You just have to pay it at the percentage that the state requires. So, but there's some areas you can get credit. So,
Correct. Yeah, you can play with the interest rate. You can play with seller concessions to reduce your closing costs. That's correct.
and do you see it a lot these days with people still paying for points? And so what that is you can pay a fee to get a lower rate. Correct. Let's say you don't qualify for, maybe you qualify for 4 and you want 3.5. Well, to make up for that, you can pay for it, right?
Yeah, you got to pay extra, and those
Mm-hmm.
are going to be included in the closing cost.
And that's
And
what
vice versa.
that's what's referred to as buying points, right? Or paying for points.
Yes, you can buy points to lower your interest rate, but you need to be aware that when you buy points to lower your interest rate, your closing cost is going to increase, and vice
Yes.
versa. If you want a higher rate, you're going to get a lender credit, then your closing costs are going to be reduced.
Yeah, and another area again too is depending on the loan amount, the percentage of it. They might be the buyer might be required an escrow account, which has to
Correct.
be paid up front too, or at the time of at the closing. So there's a lot of little items that buyers don't generally think about, and I think it helps to point that out. As we talked earlier, Maritza, that sometimes if somebody's maybe only has 3% down and everything's a little tight, there's going to be a lot of little hidden fees, and you got to be careful with the buyer that they're not getting over their head before they even start. So
Right. That is why we go back, or we circle back to our initial point where the pre-approval is crucial when you are ready to buy a house, because once you have a fully underwritten pre-approval letter, then you're going to receive a sort of very similar to what I'm showing in the screen, that instead of being called closing disclosure, you're going to see at the top loan estimate. So you'll see your approximate funds to close, your approximate payment that you're going to have every month, and all the fees that you need to be aware of.
yeah, and this also called the good faith estimate. We've heard it called before.
Yeah.
So yeah, that's a lot of good information on what all these closing costs and different companies move the numbers around to look good. But yeah, it's important upon in that pre-approval you get a good idea, and that's really up to us, the realtor and the lender, to explain that in good detail initially. And another important factor in that is that we you and I, Maritza, are actually working for free until this whole process all closes. So again, most buyers don't know that we get paid when the property closes, and that's from the seller end of the process. So it's
That is
really
correct.
free buyer representation when we're doing all this. So
Well, the only out-of-pocket expenses that the buyer will come out from his pocket is really at the beginning of the process, right? Which is the appraisal fee and the inspection fee, right? When you sign a contract. And that is, I would say, around $1,000 total for both of them. But the agents that are representing you, which is your real estate agent on the buyer side, your loan officer, they don't get paid until the transaction is completed, right? And you can even tell when you sign a closing disclosure that everything that gets paid as far as commission for the real estate agent come from the seller side. It doesn't come from the buyer's side. And there's a lot of confusion about it. But when your buyers will receive a loan estimate, they'll see on the seller side what is it that the real estate agent gets paid by the seller.
Yeah, so that's a good point. There's a couple out of pocket, the appraisal and the inspection, and then of course you got to have a little reserve for your earnest money when that's due, which is usually about 1%. That's what we're seeing in Atlanta. So you've got to have a little back, and then then you're ready financially. So you get pre-approved, we do the home search, make an offer, go under contract, and then that's when it gets a little stressful, usually for the buyers. We do the inspection, and we're getting a lot of things done behind the scenes, and it's all within about a 30-day, maybe 45-day process. So things are moving fast. And then also, aside from all that, the buyer's negotiating all their stuff for their move. And if they're selling a house too, there's a lot of things going on, and Maritza and I in the background are making sure everything's being done in a timely manner, and we're meeting deadlines, and everything's in order for the loan process. And sometimes the buyers get a little lax in getting the lender the needed paperwork, which slows things down. So the clock is ticking, and we've got to kind of stay on it too. But after that, you meet all your deadlines, everything has come together. And the second point of negotiation on my side with the buyer is after the inspection. And if you identify some defects on the property from the inspection report, that's the second form of negotiation with the buyer and seller. Then you work that out. Things keep on rolling, and then you're off to a new happy homeowner. So yeah,
It's all about helping the buyer getting the right home and getting the right loan for them with a healthy monthly payment, and a home where they're going to start making memories.